If you want proof that climate change is already impacting the economy, look no further than the home insurance market.
Insurance premiums for homeowners have gone up around 25% since 2020.
If you want to take on a mortgage, you have to have an insurance policy, and most people can't buy a house without a mortgage. And so that chain is disconnected when potential home buyers or homeowners can't find affordable home insurance.
Rising insurance premiums are a symptom of a larger problem.
We are seeing more frequent and severe disasters, but premiums are also being driven up by the ways in which insurers protect their downside risk through reinsurance.
Reinsurance is insurance for insurance companies.
These are large insurers that operate on a global scale, and they tend to be in a better position to hold severe hurricane and wildfire risk than a local company.
Insurers have to protect their downside just like homeowners have to protect theirs, and they do so through reinsurance markets.
As climate disasters grow more frequent, global reinsurers must hold massive amounts of capital in reserve, and maintaining that level of liquidity is incredibly expensive.
Reinsurance rates have skyrocketed over the last 10 years or so, essentially doubling in cost, those costs that are being passed on to homeowners.
To restore stability and lower costs, Ben Keyes, Ben Collier, and their colleague Phil Mulder propose a new federal entity to manage the extreme risks currently driving private companies away.
We propose US Re, a government reinsurance entity that would help lower the cost for insurance companies to manage the really severe catastrophes.
US Re would help reduce some of the uncertainty and the volatility in the cost of capital, and ultimately provide more stable, continuous insurance coverage for U.S. homeowners.
The scale of these catastrophes is so great that they exceed the capacity of the reinsurance industry. The U.S. government is in a better position to hold those catastrophe risks, and they tend to be in a better position to pay large amounts of funds in a short amount of time.
So we don't see US Re as a bailout for the insurance industry. Rather, we see it as a shock absorber for an industry that has gone through a number of large cycles in response to dramatic climate disasters.
Improving the functioning of the homeowners insurance market is a critical step towards coping with climate change.
It should ultimately lower premiums and make them more predictable and stable over time for homeowners.
You can explore the report and the path to more affordable coverage at brookings.edu.